This part to be reviewed is KXP Part C, and the requirement is to discuss the factors to be considered in formulating a trade receivables management policy. But first of all, we need to know what is trade receivables management policy. What are they? Or what's the focus of this trade receivables management policy? There are three key areas. For formulating the trade receivable policy. The first one is the credit analysis. The next is credit control. And the third one is how to collect the receivable, or in other words, the receivable collection. Okay, these three key areas formulate trade receivables management policy. The trade receivables management policy. Okay, three key areas that we have to look at: credit analysis, credit control, and receivables collection. And for credit analysis, the key risk is customers, okay, they make the payment late, the late payment, and also the risk of bad debt. Is the key risk, right? So the credit analysis, the purpose of the credit analysis is to reduce this risk. Reduce the risk by doing what type of credit analysis? Okay, usually credit analysis need to assess customers' credit worthiness. Okay, here's the very important part. Say A, okay, assess customers' credit worthiness. How can it to be done? By checking trade reference or bank reference. Okay, or the published information like the published accounts, or hiring the credit reference agency. Okay, here is the credit analysis. The next is the credit control. So what's to do the credit control? Credit control department, okay, it needs to monitor the customer payment history. So including the number of overdue, accounts, and amount of outstanding cash. Okay, here's the monitoring. Okay, monitoring the customer's payment history, including, for example, the number of overdue accounts and amount of outstanding cash is the first part. The other part is first part. The other part is credit control needs to send a reminder to customer for urgent payment. Okay, so sending reminder, okay, is one of the job to do the credit control, and there's a flow. Sending reminder, maybe the first step is send reminder, and then is the personal visit, to call for the payment, and then it's an official letter. Okay, if you cannot pay, then official letter, and then it's warning letter. The last one is legal action. Okay, so there's some steps that you have to follow. You cannot say once the customers make the payment late, or you cannot receive the payments on time, and you send the legal letter. It's not reasonable. But in general, there's steps to follow by the credit control department on urging the customers to pay. It's a credit control, and the third area that we just mentioned is the receivables collection. That is any late payment need to check. Okay, any late payments need to check. And to consider any legal steps. Okay, but don't forget, when we work in the working capital management topic, other than profitability versus liquidity is one of the key concepts you have to remember. The other concept is benefits versus cost. For any receivables collection action from it, any actions, it should be the principle is benefits must exceed cost on receivable collection. Okay, it's the basic principle that we have to understand. Okay, we have to know. Once you chase your customers to pay you, but if you incur a lot of administration charges or a lot of costs, you have to incur a lot of costs for, say, $1,000 outstanding that are not paid, are not settled. But your administration charge incur maybe more than 10,000. So it doesn't make sense for you to get to settle the outstanding balance, because the cost incurred is much higher than the benefits you get. If it is the case, then maybe sometimes you just make the bad debts of this $1,000 account receivables because you incur so expensive for the collection. So please consider any actions. The principle to be in mind is whether the benefits exceed the cost.